Boom, we are alive, ladies and gentlemen. This is Tio and the Arcane Bear. Thank you for joining us on another episode today. It was a little bit late, got caught in traffic, but nonetheless, was I wrong? Have I made a mistake? This is always a good question to ask yourself. Well, in general, my dad used to say an old adage, measure twice, cut once. This is another great way to look at the markets. So today what we're going to do is we're going to go over something that I think is important to look at. It's the difference between reaccumulation and distribution, because they can be eerily similar and that can be deceiving. And one of the last things you want to do is be deceived by the markets, because that's literally what comp man is good at. So on the charts here, we have Bitcoin. Now this is what I had drawn up. I haven't touched the drawing since the 14th, and I think we started on the 11th with our primary shakeout. Now, a big part of the question is, well, first off, in the private bear den, you guys had pointed out something quite nice, which is this here. Now, I'm going to go to the 4 hour here, and I think that there's something important to go over as well. So a few of you had made conjecture in the private bear den, those of you that have been studying first and foremost, that these were just potentially secondary tests and that we hadn't actually seen the spring yet. And there's good reason for this. So one of the things we'd like to do is first go over today's basically lesson, and then we're going to delete all this stuff. We'll do the same for Ethereum just for fun, because it's one way to check our work and see if we've got it right. Again, so the big question right now is, have we not seen the spring? So part of the reason why that might be a question is because both of our secondary tests don't have the initial volume that our primary shakeout did, especially on the 4 hour. And this is something I've said I like to see multiple times, is a shakeout after your buying climax whose volume is equal to the spring. And we haven't seen that yet. So have we missed the spring? Like, did we not get it yet? This is a great question, and I commend you guys in the bear den for looking at it potentially like this as well, which is that we are still in phase B. You know, there's a hearty reason to think this as well. We'll go over other aspects of the market near the end of this episode. We'll also do community engagement, so make sure you stick around for those of you who are on the live stream right now and give us the thumbs up, because, you know, this content is awesome, and I'll punch you guys in the throat if you don't like it. No, I'm just kidding. I would never do such a thing, but I heard Philip DeFranco say it once. I thought it was pretty funny. So, let's dive in. Let's go to our lesson today. So again, like I said, guys, a lot of what you can find for free on the internet. Not my face. There we go. Reaccumulation review. This is from Stock Charts. And the reason I want to go over, why I constantly go over free resources, is because I want to remind you guys, you should be doing a lot of homework on your own. So this says a big thank you to Erwin Swellman and Tom Bowley for hosting on Market Watchers Live. This is by Bruce Fraser. And I really like what he starts to say here. Here you can see your general reaccumulation pattern, your primary support, your buying climax, your automatic rally, your secondary test, and then a bounce kind of along the bottom here as your spring. Now, there are variations of this. We had looked at variations of this reaccumulation pattern, let's say schematic 3. And one of the questions in the bear den is, are we still in phase B? And I think it's a great question. So let's go over reaccumulation by Bruce Fraser, and this drawing here is by Professor Hank Pruden, who I believe passed away. He was a fantastic Wyckoffian. Now, as reaccumulation serves the same purpose as accumulation, with one main distinction. An accumulation stops the downtrend as the composite operator begins the lengthy process of absorbing shares. And this is basically what I think we're witnessing now, is a reaccumulation. So instead of let's highlighting phase A and B and C, let's also start to look at this the way Professor Hank Pruden did, which is with no spring necessarily, and just a bounce along the bottom. So we have our, although they did label them a bit differently, I think that they were calling this your automatic rally or automatic reaction, and then this was your secondary test. I think that's how they labeled it on the internet there, although however works for you as long as you know where you are. So back to this. Now, again, one of the important parts here is the stopping action of the selling climax, which is what we saw in this automatic rally here as well. Now, what I want to go over, and the reason why this is important, is highlighted in this specific sentence here. Often traders will misinterpret reaccumulation as distribution. So one of the big questions, everyone's like, oh my God, is it going down? Bitcoin's not coming back up again. This is the end of the bull market, blah, 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 blah. One easy, I think, sentiment to fight that feeling is to, go back to the beginning of the year, since we've been charting this, and remember how long we've been in a bull market? Not very long. We only left the trading range in October. So the bias is still bullish, right? This has only been 108 days effectively. I expect that we're going to get geez, I'm talking so quickly today. I expect that we're going to get at least 300 days of bull market. Now that might mean we get another 90 days of sideways action into the summer solstice. So because we know where we are in the market at large, it's pretty easy in my mind to assume that this is reaccumulation. Very similar to the reaccumulation patterns we saw here, here, and here. Now this reaccumulation is obviously a big change of character in difference, where in the previous reaccumulation patterns, we were measuring around 10 to 15% max through each box before this one. Now this box range is significantly larger, around 30%. And there's multiple reasons for this. The first being a lot of big institutions who got in at $3,000, $4,000 back in March are taking profits because their investors are looking for alpha in US dollars. So they'll make sure they follow their quarterly reports, execute, and return profits to their investors, moving partially back into cash positions. Not everyone here is just gung-ho to have only Bitcoin. They need liquid capital that they can move around to function their businesses and any number of things that they do as investors and institutions. So this big change of character, I think, is the first reaccumulation cycle that we're seeing that represents, it's basically a first LPS after the SOS. Because we had no stopping almost whatsoever from 11 to 19 to 23 to 27,000. Again, we had previous reaccumulation patterns back in here as well. Beautiful horizontal trading range. This was a rising gradient bottom. This is where Michael Saylor first bought his 60,000 something plus Bitcoin. And then this was the breakout of the box. And for those of you that have been with us for a long time and studying, you can go back and look at all these videos where we looked at these trading ranges exactly like we've been looking at reaccumulation. Now the question is this distribution? Because they can often be mistaken for one another. And that's the big case. Now, it's important to recognize that accumulation itself takes multiple years, most often. So for instance, if we go over to Ethereum, I don't know why I said Litecoin, makes no sense. If we go over to Ethereum and we open up, I think it was on the BUSD chart we had drawn in, clean this up. I was watching my momentum indicators. You guys don't need those. And let's go out and see this full story that we're looking at. USDT actually, there, okay. So for those of you that have been following since the pandemic began, this was our primary accumulation range. Now an accumulation range, as I've said multiple times, especially to those in the group, should take almost a year. So from our selling climax to our first LPS, we had 569 days of accumulation. This is exactly what an accumulation pattern should look like. It should take almost years. And the more you can let that sink in, the easier it is to recognize that we are still early on in this bull market. This 2-year accumulation cycle does not just end in 180 days. So I'm leaning towards reaccumulation. But again, we're trying to, do we get it wrong? You have to ask yourself that question. Measure twice, cut once. So let's keep going over this. We'll use Ethereum again just for conjecture because I have this chart open. We had our breakout, our SOS, our first LPS, which was a reaccumulation after decline, a rising gradient bottom reaccumulation here, which was absolutely explosive and represented basically another final last point of supply before we saw a massive explosion. And then we're seeing something very similar in Ethereum. And we've been charting this with you guys over the last 2 weeks, which is, are we witnessing a reaccumulation pattern? Now, let's actually get rid of the phases here because Hank Pruden didn't use them, so let's not use them either. Here we go, something like this. Okay. I believe we are still ultimately bullish, especially for Ethereum. We are still at the top of the box. I think that we're just building a new test range. I believe we saw our spring already here, and again, could be wrong, but we're going to try to prove that with Bitcoin right now. So if we keep comparing these two, we've got our primary support, which we have not really been able to break below. Our primary support dips down as low as 27,950, and we've hit the test, which basically represents the primary breakout of this reaccumulation range as well. So we've got this this buffer region basically that acts as the support. Now, what we're looking for, and this would, to prove that it would be one more shot against resistance like this and then a break above the creek. Now, again, we could argue that we've already seen that resistance check, but this looks more like the secondary test after the automatic rally, as we can see here. Bang, 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 bang. And this little dragging along the bottom here looks perfect to the support area. So for those of you that were in the private den and were asking these questions, congratulations. I think these are great questions. You never want to just listen to me. Like, the whole point of the private group, and well, in general, I think, at least for what we try to do, is educate your own self so that you can feel more confident. And if you come up with conjecture and it looks viable, I'll bring that up on a live stream. Absolutely. So I think that you might be right. I think that we might still yet have this break into resistance that we have not seen. But more importantly, let's keep reading what Professor Hank Pruden had to say, because he's passed away, but ultimately he had spent 50 or 60 years doing Wyckoff trading, where I'm like in my first few understanding the markets, 10 in total, but where I really got the keystone of understanding what the markets are was pretty still with the pandemic, understanding that psychological spring, that idea of, hey, buy when there's blood in the streets. Unless you have been in a moment where there's blood in the streets, that just sounds like metaphor, but it is a literal saying for a reason. It means at the height of the pandemic, instead of running out and buying toilet paper, what you should be doing is accumulating distressed and undervalued assets. So now that we've gone through that accumulation cycle and we're studying further to better increase our chances of success during this, we're going to study from people that had spent their entire life doing so. Richard Wyckoff is one of them, Jesse Livermore, and in this case, Hank Pruden. So with careful analysis, Wyckoffians can learn to make the essential distinction between these conditions. If you recall the absorption results that we went over in reaccumulation or in accumulation, the price action becomes ever less volatile as the structure comes to a conclusion and the uptrend begins. This is because most of the available shares have been removed from the marketplace, and we've gone over this before. Glassnode provides this absolutely brilliant data on Bitcoin on the open market exchanges, which will let load up here. If we go to, you guys have to pay for this, but we've got you covered. So exchange balance, let's go stacked because it's nice and colorful and pretty. And then we'll go back to reaccumulation because we can very clearly show this area of the available shares have been removed from the marketplace, right? So think absorption. And this is what we're witnessing here. Just over the since January alone, we've dropped exchange balance percent. Actually, that will look a little, I think that was probably a cleaner way. Yeah, here you go. From August to today, the amount of absorption of supply has almost all been removed from the market. We are now hovering just around 12% of all available Bitcoin on the open exchanges. So we see products of absorption happening just since August, again, increasing the chances that this is a reaccumulation pattern. In the schematic above, notice how each of the lows in the area of support are higher than the prior low. Okay, well, here's our secondary test and another test of this. Our primary low and our part of our primary support here was still lower than both our automatic rally and our tests. So, okay, we fit that criteria as well. It is not uncommon for the lowest price of the structure to be the AR or the following test. Okay, well, AR or the following test. Okay, so far, so good. We have not broke this structure yet. I'm leaning towards we weren't wrong. Although I do think it is important to recognize that I was probably making a very recognizable mistake. I'm sure some of you can see it right now. Reaccumulation shouldn't necessarily be charted with phase C and D. And how it's done here in the schematics. Although you can chart phase C, it doesn't really give you the same access to information as these multi-year accumulation processes that we had looked at with Ethereum just previously. And Bitcoin did the exact same thing. So are we fitting the criteria still? Okay, well, let's move on. Reaccumulations also have a spring at the conclusion, and we've looked at this multiple times from Roman Bogomazov, I hope I said his name correctly, where you have different types of phase Cs. And a spring action that can be categorized as a spring as a break below the box, even a break above the box sometimes, which is, I believe, what we're witnessing with Ethereum. Okay, so far, so good. I still am feeling confident about all this, okay. Next idea, right? So here is a pattern that we can look at as a 2-hour retrospective study of the Dow Jones Industrial Average. This is a reaccumulation analysis for intraday trading. I don't recommend these shorter trades for those of you that are studying, but I think it's important to make the distinction between accumulation, which should take almost years, and reaccumulation, which you can notice on the intraday, which is where we are now, effectively. So using the 2-hour chart, the two reaccumulation pauses are evident. Each sets up an attractive swing trading rally, and these are often called stepping stone reaccumulations, as they look like stair steps. The lower is stopped out by BCLX. So here's your primary support, your BCLX, your automatic rally, your secondary test, and your AR at the beginning of the range-bound condition. The formation is about 5 weeks in duration, and note the spring the test results in a change of character at the beginning of the market, an upthrust, and the midpoint leads to a long grinding decline in returns all the way to the support line. Laddered boards such as a labored decline suggests the absorption is occurring on the way down, and the ease of the rally follows the spring that confirms it. Note how the reaccumulation could be misinterpreted as distribution. And this is a big problem, right? Because distribution would say that we go like this, we break below the box. We'll make a negative color here, a red. Oh my God, we break below the box and we do something like this. That would be effectively what distribution would look like, right? It would be a change of character below these supports that we have from our primary support and our basically our automatic rally and our secondary test. I call them shakeouts, automatic, just because you have an automatic reaction or an automatic rally. So I think it looks better as a shakeout just to make that clear distinction between the two. So we'll continue keeping it as a shakeout for now. So we'll keep going over this. As you can see on the 60-minute chart, additional detail, you can see how we rise up against and we keep hitting the bottom of this chart. And these are these small reaccumulations that we had looked at just previously in Bitcoin as well, where you have the test against the bottom. This is just the first big noticeable reaccumulation with a box size of 34%. So in 2017, during the bull market, we had these consistent box blowouts where we would drop 30% before we broke up another 100+%. This to me looks extremely healthy, and a correction to below this does not seem to be all that sensible at the moment. When you go out and you do your homework, you see Grayscale buying hundreds of millions of dollars of Bitcoin. Michael Saylor still doing his monthly buys at $30 million in Bitcoin. This looks like reaccumulation. Everything in my blood is screaming that because it took 2 years to get to this bull market start, and we're only 180 days in, and it should last longer than that. Now, the fun part here is that we get to make conjecture because we could be wrong. So this is what we're going to continue to do today. Here we'll make another one here. This is another great retrospective analysis of the Dow Jones Industrial Average on a 60-minute chart, the reaccumulation that we were just looking at, where you see your primary support, your buying climax, your shakeout, we won't call it an AR because it's SO, your secondary test, and then look how we bounce along the bottom here, kind of always following the support line and tests. This is what we've seen perfectly. There's nothing that makes me believe we should be bearish in this market at this moment. But it's good to check. I think ultimately asking the question is always important because we can be wrong. We can misjudge, and especially with reaccumulation patterns, they can look almost identical to distribution. And you shouldn't just believe that you're right, because so often you'll jump into a trade, you won't know what you're doing, you'll be charting this, you'll think you'll have done it flawlessly, and you'll make a mistake. If you are charting and studying and part of our private group right now, please go back and do retrospective study analysis on Bitcoin and Ethereum. Chart accumulation ranges that take years. Look at Tesla. Look at the Dow Jones Industrial Average. See if you can find things that have already happened, because then you know what will happen, and it makes it easier to make those assessments. And it definitely makes it easier to study. But for now, we'll continue forward. Okay, so the second smaller reaccumulation, in contrast to the larger structure of November, while the prior had a spring at the end, this has a series of slightly higher lows. Again, this would be disturbing, like, oh, wow, slightly higher lows. Slightly higher lows is actually a positive thing, not slightly higher or lower highs. Excuse me. Maybe I'm a lower high right now. Jeez. Okay, this suggests a good demand for the Dow Jones Industrial Average as the reaccumulation matures. Again, here you have from the 18th to the 4th. Well, how many days in this are we? That's a great question just as itself. 23 days. Okay, so we're kind of right fitting along that line for our final secondary test. We may even see one more here where we do this. I can't express enough how important it is to continue to be patient and be like Action Ashley from yesterday's episode. If you didn't watch that, please go watch yesterday's video. I think it is hugely important, especially for new or would-be investors. You need to keep executing to build a portfolio all the time for the next decade. Don't think you need to do it all right now today. However it suits you best so that you don't get emotional is probably your best bet. If you want to be like perfect Peter, go ahead, study your ass off. If you want to be like conservative Charlie, just do that. It will remove emotions from the game from you. But Action Ashley is effectively the most prudent of the investor, which is just invest and don't think too much. So if you're not going to think too much, just remove how much you invest, and that's the easiest way to do so. So this here alone, you had around 35 days, and we're not even 35 days into this reaccumulation pattern. So if Bitcoin has any reminiscence right now, we've got at least another, let's say 10 to 15 days. Nothing in this pattern right now says distribution to me at all, especially when I look back and ask myself the question, how long did it take to get here, Tio? Are we in a bull market, or are we tricking ourselves? I think when you zoom out and you look at the large frame picture here that's going on, and you recognize that the accumulation pattern that it took to get here, and I'm using Ethereum right now, but Bitcoin is almost identical. I'll show you. It took 600 days to get to the first SOS. And you think the bull market is done and in distribution within 180 days? That's insanity. It's not how these cycles work. These cycles are usually almost a reflection of each other, usually by about a half. So I would assume that this bull market will last at least another 180 days. And again, we'll look at Bitcoin one more time here on these larger time frames to get that story that we were talking about. Again, remember, here's our reaccumulation, or our big accumulation. It took 694 days from our selling climax to the breakout of our trading range. And we have been in this bull market out of the trading range for less than 120 days on Bitcoin, and people are worried about a bear market. I really cannot express enough how much these two don't connect and the clash here that comes into mind. So I believe that this is 100% a reaccumulation pattern that we're witnessing here. Do your own homework, do your own study. Argue with me. Show me why you think it isn't. But until we see consistent closes, and especially above this primary trading range that we have drawn here in blue, I'm staying in an accumulatory position. I've bought Bitcoin and I've bought Ethereum this month. I'll do it again next month, even if the price is higher, and I'll do it again next month, even if the price is lower. That's the best way to invest. And think long term. Now, in terms of study, to be able to make executed, highly functioning leverage trades the same way you go to the gym and use like weights to build muscle, because you can leverage the time through space that you need to build your portfolio, this is a great way to do it. Again, if you're new here, I cannot stress enough the importance of reading books and studying other people who have been doing this for their entire life. I'm just one person who's echoing other people's like main teaching habits. People like Richard Wyckoff. I had this moment where I was like, I get what this means. And it doesn't always happen that way. You don't always understand what these people are talking about until you have a pandemic. And you're like, oh, blood in the streets. I get it now. This makes sense. We are trading human emotion, and it has not changed. Human nature has not changed over 100 years. So it's very likely that it will continue to do the exact same thing. It always has. We may see a secondary test. Sure, why not? I'm in no rush. If we start to see big closes, and more specifically a drop down, and then a kick up to the primary trading range, and then back below, well, that's a different story. We may drop all the way back. We could drop all the way back down to zero. I think it was Jordan Bowen in there into the private group that said, my stop loss for Bitcoin is at $0. These are asymmetrical bets in general, ladies and gentlemen. All of them. What you're looking for is huge asymmetry in any investment, so that if you put $1,000 in, it might turn into $1 million over the course of 10 years. That's literally how venture capital should be defined. So don't get too greedy. Don't get ahead of yourself. Don't rush, and don't get too emotional. Anyways, I'm really excited about that. I really think this guy's funny. Print or die he knows absolutely nothing about money. Tether and Bitcoin are robbing people blind. First off, I kind of wanted to talk about this sentiment anyways. For those of you that saw, oh my God, they're printing Tether and that's keeping the market up. look, you need to adjust to understanding that Glassnode is not using USDT. They're accumulating Bitcoins in the hundreds of millions with paper US dollars. Now, look, they're printing trillions of dollars of paper USD. All of these make Bitcoin more valuable. The Tether FUD is absolute trash, nonsense. It doesn't take, I think, should take you only 5 minutes of meditation to understand that Tether does not hold this market up. Tether does hold the leverage trading up to some degree, as USDC, which is Gemini's coin, is significantly more regulated, and USDT is where all of the other exchanges. But what does it matter? They're just printing US dollars. Who cares if they're just printing like USDT? The only thing you're upset is because you can't print it yourself. Well, good. I'm upset too, but I also can't print US dollars myself. And that's the real point of this conversation. This is a pure monetary asset that cannot be printed randomly by governments. Even if they make USDT, well, does it matter? They can just make USD. It shouldn't matter. And that argument is absolutely nonsense. Okay. Days like this test our patience. That's exactly what these secondary tests are. There's a secondary test of your patience. Okay, awesome. Guys, I want to take a look at a little bit of the general markets. Well, let's go over Ethereum here as well and kind of make the same conjecture. So we're looking at Ethereum, and what we want to do is, and we've done this already now, is we've removed our phases so we can kind of keep track with Hank Pruden's work here of this particular reaccumulation pattern. There are many types of reaccumulation patterns. You can find them all over the internet. Again, just do your homework. But again, I think just this horizontal trading range is the one to keep an eye on. You'll also see bull flags that drop a little bit as like a vertical decline as a reaccumulation pattern in the box as well, but that's a different story. We are currently studying that as well. Okay. So Ethereum also very similar context here, although Ethereum's current reaccumulation pattern looks ultimately more bullish to me. I think what we're going to see on February 8th, just like 2 weeks from now, there's going to be the CME futures open, and that could go either way, right? Futures can go either way. It means big whales could ultimately sell short an enormous amount of Ethereum through paper dollars. The same. So again, it doesn't. These questions about Tether are basically useless to anyone who studies. But more importantly, it could be ultimately bullish because some of these institutions don't have a way to get their hands on Ethereum. And if they give them the futures option, they might see the ultimate potential in the upside that we just started a bull market. It's not done yet. So I believe that Ethereum doing something very similar. I think that these are our secondary tests here. Let's not call them the spring anymore. I'll try to keep it similar to Hank Pruden's free stuff for now, just because that's probably what I know. We only have. Okay, well, hold on. We've got like 500 or 600 people in the private group. Thank you all for joining. You can join the links down below. $45 a month. No questions asked, refund guaranteed. If you're not happy, let's give your money back. But for those of you that aren't in our private group, I'm trying to make sure that all of our private educational materials, because we're building courses, match what you can find for free on the internet. That way you don't find conflicting evidence of like, oh, schematic 2 is here over this and schematic 3 is that over there. I want to make it as uniform as possible. That way no one gets distracted. And I can already tell that that's happened by talking about phases A and C and ultimately missing that accumulation and reaccumulation are totally different structures. Again, so this is a reaccumulation structure, not an accumulation structure. We left our primary accumulation structure on Ethereum like in August. Oh, is this August? Yeah. August. So here we go. Here's our our accumulation structure is all of this bottom area. We've been making videos about this the entire time it's been happening, at least since March. And now we're in the bull market. So I do suspect we're going to continue much higher, but these are reaccumulation and they are different than just your average accumulation. So reaccumulation happens after the breakout of accumulation. So keep that in mind. They are different structures just in general. Let's take a look at the overall markets. And I actually had a feeling about this morning. So let's use our DeFi perp screen. Now, one of the things that happens are these general shakeouts in the market at large. So we try to do that by charting the VIX. So the VIX is the volatility index, and it measures emotional sentiment in basically the tech sector or the S&P 500, which is to me mostly tech sector stocks at this moment because those are the biggest players. So the VIX right now peaked up and smashed into our long-term trend line and then dropped back down. I don't suspect we're going to ever get back above here unless we see some absolutely crazy nonsense, which could happen. The universe is full of surprises. So surprise me, universe, if you'd like. But if you remember, this peak of the VIX here was when the pandemic started. And then you had, oh my God, everyone's in lockdown, businesses are closing. And I think you had the first BLM protests / riots in certain places. And then you had more, I think this was something about, I forget what, there's something crazy that happened here. And then this was the inauguration time. Yeah, November 3rd. Look at that, right on the date. Or like the, not the inauguration, voting day or whatever. God, shows how little I care about politics. It's unimportant as long as we see it here. So this here, we've been in a consistent downtrend of the volatility index. I suspect we're going to actually continue lower, but some of this has to do with the fact that a lot of places are going into secondary lockdown. Canada, the UK, they're creating more stringent regulations, which is absolutely absurd. And this volatility spike index, oh, the vaccine isn't going to work. We're going to need a new one because there's a new COVID variation or something. This is all the human emotion reacting. And we've been in a really volatile place for the entirety of 2020, and Bitcoin has loved it, right? So I wouldn't get too worried about the general market right now, but it is good to look and see what's going on. So we're going to start by taking a look at the S&P 500, which we have drawn up. Oh, beautiful. Considering we've been in a rising channel outside of the previous trading range for quite some time, with this we drew about 3 or 4 weeks ago for our private group. I'm looking for a spring right now in the S&P 500, and you may see that Bitcoin also prints something very similar at the same time. So the S&P 500, for those of you that don't know, is basically the Standard & Poor's 500 top companies of the United States, and they all move together. This is an indices of that company, of those companies. And as again, you see red in everything in the tech sector right now. Zoom, Square, Tesla, although Tesla is just looking sweet. Also, guys, again, if you want, go back and do retrospective study. Like, look at this reaccumulation pattern Tesla was in for almost, what was this? Here's a beautiful accumulation pattern for Tesla at 849 days. Here's the day Elon Musk broke the window. They're like, oh my God, Elon Musk broke the window. God doesn't even know what he's doing. Yeah, I'm pretty sure he does. I actually thought that was on purpose. That's how well coordinated I was. I thought that was like, man, if that motherfucker break that window on purpose, like that is the best marketing I have ever seen. Anyways, okay, where did I want to go? Oh yeah, we'll take a look at silver and gold too. Oh, I don't have gold up here anymore. Just again, this is a way to kind of measure more traditional investor sentiments. Everything looks pretty standard. We saw a preview. Look at this long reaccumulation pattern for silver too. Jesus. See again, guys, this is why retrospective study can be so valuable. Look at this kind of falling pattern here. Here's our spring, again on the pandemic. And lastly, what did I want to look at? There was one more thing I wanted to go over. Oh yeah, you guys were asking me about the DXY. So the DXY, the Dixie as we call it in the old school of us, is the US dollar index chart. It's been weakening for 70 years. So it's really funny to see people talk about the markets when they're rather new. Hold on here. I'm just gonna. Oh. Unhide this user. Sorry guys, just one sec here. Okay, so right now we're looking at the DXY chart. And what I wanted to point out was I saw some people talking like, oh, look, as the dollar climbs, markets crash. Well, first off, the market hasn't crashed. Everything's pretty normal. The volatility index has definitely spiked, but the Dixie has only moved 1%. And ultimately, as they go to print more money, it's going to drastically decrease. Here you can see pretty much since the pandemic, you had the opposite of a spring, UTAD test, and we've been going down, 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 down since then. We've dropped 13% in the value of the US dollar since then. Sorry, Spanish chicken, I accidentally hid you. I'll make sure I undo that later on this evening. Okay, let's see. Okay, yes, so we've got a big drop on the DXY, but again, all you need to do is look at the long-term story here to understand what happens. Currencies always degrade. They print more of it. We're basically testing a fairly important level. So we've got data should be a long. I thought I had more data. I thought I did all the way back to 1930 on here, but I must have a new one. This has been declining like this for a pretty substantial amount of time. You could see a big dip in the dollar over the next little while as they just continue to print. So I would keep that in mind. It's really important to be patient. A lot of you guys have been asking about Uniswap as well, which has just been on a tear lately. So I'll take a quick look at that. The last time we looked at it, it was around $8, and I was like, yeah, we could probably pretty easily go to 10 or 11, and I think it's smashed through to what, 13? Oh, it's at $15 now. Yeah, on an absolute tear. So for those of you that don't know, Uniswap is an automated market maker. Yeah, here was the last trading range we drew before it broke out. Nice reaccumulation pattern with spring at the bottom, and then a huge breakout. Really nice to see. Uniswap is a big player, guys. For those of you that have been around long enough to use like Ether Delta and Fork Delta, yeah, look at the nice horizontal trading range we had for accumulation before we broke out the first time back in December. Missed that one, but you can see the importance of following these horizontals in the long term. So Uniswap is a big player. They've got billions of dollars in liquidity locked up. I think this is definitely over an evaluation, and it's just a hype around the token. The Uni token itself is supposed to represent a governance aspect of the token, very similar to SushiSwap. So it'll be interesting to see how that goes. Again, these are venture capital plays. You want to look at basically making small investments in the entire DeFi sector because it's going to be huge. This is just the start. AAVE is another great example of that, where we had once we broke out of this rising gradient bottom we had been watching, it absolutely flew. So if you guys look back at my previous episodes, this was a very beautiful rising gradient bottom we had gone over, highlighted the spring, and as soon as we hit this backup phase, we've just gone absolutely mental since then. I think since this box, 196%. And what was Uni at already? Since the primary box we drew back in December as well, 314%. Yeah, so both AAVE and Uniswap are doing absolutely amazing. But again, think about the long term here. Uniswap could even be totally replaced in the next 20 years. Like, could be a pets.com for all we know. And that's the important to understand venture capital. Keep putting capital in there and basically walk away. You can make huge leverage trades, but it's way too volatile and dangerous. I much prefer playing the venture capital game here. Anyways, thank you guys all for joining us on today's episode. That is the end of the first part of the conjecture. Now we're going to go over to a little bit of community live chat. I know you guys always like this, where we just kind of banter together. And I know everyone gets hyper emotional because, oh my God, everything's going up, everything's going down. Look at Uni. Oh my God, chase Uni. I'm going to jump from Bitcoin into Uni. And then now you're like, oh, whatever. Don't do that. Just be a better investor, flex those muscles, keep showing up monthly, and make investments. Use this time to practice and study. And if you want to become a better, more well-executed trader, don't think about this year. Think about the next 10 years of your future ahead of you, because that's the only way you'll really be successful in this game. Okay, let's see. Oh my dear Lord. Pineapple from the jungle, in the freezer, in a blender, and then in a cup is like, oh, thank you God for the delicious things that you put on this planet, or whoever made this. God, it's amazing. Hats off to the designer of pineapple. Best shit ever. Okay. What other artist is kind of like Pussifer? No other artist is kind of like Pussifer. That's what I'll say to that. What do you think about Vet? We not really on my radar. Again, I'll stick to the venture capital play. I don't want to do too much extra charting today. Alex, who I always love answering his question, says, I think we should talk about what happened to GameStop and AMC. So I'm not sure what happened to GameStop. So I'd have to type that in. GameStop. Let's see here. Oh God, why would this failing firm soars in value as amateurs buy stock? You know, that happened recently. For those of you that would have, you probably, so this is Signal Advance. So Signal Advance is definitely not the signal that you can buy on your phone or that you can use on your phone like WhatsApp. So immature retail market investors who don't know anything about what's going on instantly bought SIGL, but they didn't realize that Signal is a non-profit 501(c) and you can't invest in their company. So it went from 59 cents to $38. That is absolute insanity. Like if I were to open that on the charts, and this is probably something similar that just happened to GameStop, although I'm not entirely sure. GameStop stock riggers and the entire financial system is going to be corrupt and lawless. So they were probably naked buying and selling, I would assume, which is retail Reddit traders versus hedge funds. Yeah, I'm not sure what happened here exactly, but you can do something called naked shorting and naked buying, which can it's basically like price rigging. Analysts blame tech-savvy young day traders who they say are taking on hedge funds in a conflict with generational overtones. What the fuck does that mean? Yeah, this is not worth anything. Yeah, just be careful of stuff like this, like Signal. This actually happened to Zoom too. For those of you that were with us back when Zoom first started to explode, let's take a look. There was another one. I think it's called, let's see here. Okay, yeah, see, you have Zoom Technologies and Zoom Video Communications. So for a little while when Zoom first started to explode, you had a bunch of people who were buying Zoom Info Technologies. And back then it was just called Zoom. The NASDAQ didn't call it Zoom Info yet. They changed it so that Zoom is actually ZM. NASDAQ kind of fucked up on that one. But look at this chart. This chart is ridiculous. This kind of shit happens all the time in the markets. So we'll go to the daily or the 1 hour. Yeah. Okay. So where was it? It was, they don't even have all the chart because they've renamed it. That's too bad. There was a moment here where Zoom was like this penny stock, basically, was just shot through the moon by retail investors buying the wrong idea. Very similar to what you see with Signal here. I assume something similar to so this is kind of fun. So Jennifer Jarvis, she says on subreddit they're pushing GameStop, Bed Bath & Beyond, and AMC, the theater, in order to manipulate the markets the way the big boys do. Okay, so this is kind of fun. It's not market manipulation. I think for those of you, again, this is a really, really classic way to go over this. Wyckoff, Richard. This idea about, let's see. Was it just Richard Wyckoff? Yeah, it was. Okay, I'm going to read something to you guys again. I read this to you yesterday. It's understood the day before. So Wyckoff's Composite Man. So Composite Man is basically everybody. So it's not manipulation. This is just how markets work. Like literally buying and selling is what moves the price. It's not manipulation. Like it happens with Doge when all of a sudden all the people on TikTok are like, oh my God, Doge, the price goes up. That's not manipulation. That's just what money does to a market in the liquid markets, especially something like GameStop, which had probably nobody buying it or selling it even to begin with. Now, there could be more to the story, but I want to go over this because I think it's important. Wyckoff proposed a heuristic device to help understand price movements in individual stocks as the market as a whole, which he dubbed the Comp Man. All fluctuations in the market are various stocks and assets should be studied as if they are the results of one man's operations. Let us call him Comp Man, who in theory sits behind the scenes and manipulates the markets to your disadvantage if you do not understand the game as he plays it, and to your great advantage if you do understand the game as he plays it. So the important part to hear is that the this is how markets work. Buy and sell pressure literally changes the price. And if you're on the wrong side of that trade, you call it manipulation. If you're on the right side of the trade, you're like, yay, profit. So what they're doing is showing that you can change the price of a market by getting a bunch of people to collaborate on buying and selling. It's really, really interesting to see what that will do. I think that there was some naked shorting involved with that too, from what I can tell. And they'll, again, if they're all collaborating together, it'll be really hard to bring a suit against them. I mean, congratulations to all the Redditors who managed to do that. I think that's fantastic. I think they've done something actually really neat there. I'll have to learn more about it as well. It's a social media of day traders with access to free and low-cost trading platforms who probably have a lot of time on their hands. They've been swapping tips and ramping prices via Reddit chats and Wall Street bets. It's AMC, BlackBerry, Nokia. Awesome. I love this. This is definitely like a David versus Goliath story. The small players realize that they're also comp, man. Like, look, guys, if we, like, for instance, if we wanted to go jack up the price of a token right now in a really illiquid market, we could do that. That's literally how the markets work. Anyways, we'll end off with that. Thank you for bringing that one up, Alex. I appreciate it. I think it's really important to go over that kind of stuff. It's very interesting to see. And again, don't make the silly mistake of accidentally buying Signal. This was another reason, like, this wasn't manipulation. This was just literally what happens if you buy a stock that's entirely illiquid. It goes from 60 cents because it's not worth a goddamn thing. And then all of a sudden, hundreds of thousands and millions of people who don't know anything about the stock market go look for Signal in the markets, not realizing that Signal is a 501(c) and does not sell stocks or shares in their company at all, because it is literally a charity. And then you get this. You go from 39 cents to $30. It's like 1,000x. You get 1,000x on Signal Advance on an OTC market. That's what the Redditors did. The Redditors realized you could do this to penny stocks. That's how a lot of the penny stock traders make money. They'll start a group, they'll get everyone to buy it, they'll pump the price, and then they'll dump on the other people that they have in their group. That's why I focus on things like Ethereum and Bitcoin. I mean, yeah, there's bigger players like Michael Saylors and Grayscale can all dump on us, but at least we can watch them. At least we can like literally go in here and be like, okay, well, what are they going to do? Where's their how much of their liquidity is on the open market right now? Can't do that in the penny stocks. So I'm really grateful to see that Bitcoin and blockchain provide more than just a valuable purity in asset. It also gives us very pure, transparent on-chain analytics that we can use to measure the market sentiment and make smarter investments as well. Anyways, it's Tia with the Arcane Bear. Thank you guys all for joining us today. I really appreciate you. Remember to give us a thumbs up if you like this content. Give us a thumbs down if you don't. Either way, whatever makes you happy. But just do something where you give us the thumbs in any direction, because you know, YouTube. Like, subscribe. Oh, we already went over the like thing. Yeah, subscribe. Hit the notification bell. I'm sure you guys know this, but I'm just going to tell you. If you don't hit that notification bell, you won't get a notification that we're going live. And we're going to go live every day and take a look at the markets so that we can learn as much as possible. I hope you guys enjoyed today's conjecture. I appreciate those of you in the private bear den who wanted me to relook at this. I think that what we were looking at here in Bitcoin as a larger market cycle is really important to understand. There is nothing here to me that says distribution. So thank you guys for bringing that up. Nothing here that says distribution to me. So we'll see you guys again on tomorrow's episode. This is Tia with the Arcane Bear. If you want to know about the title of the video, go back and watch the beginning part, because I went over Bitcoin and Ethereum in the beginning part of this video as well. Okay. Yeah, wait, hold on. Oh, I'm sure you guys want me to end with some music or something, because you guys always like that. So again, we'll do that. Let's see, flute or guitar? Flute or guitar? First one answer on the screen here. That's what we'll go with. We'll always end shows with music for you guys as long as we can. We already wrapped up the live. That's it. Yeah, that was a secondary test, guys. Guitar it is. Oh, wait, are they in tune right now? Let's check. I have one guitar in tune, maybe, if I'm lucky. I think Dana probably tuned it up here. Nope, not that one. No. None of the guitars are in tune right now? Okay. Well, you know what we'll do? Let's use the oud. I got to restring the guitars. They're just I'll do the flute. Wow, everybody's asking for the flute. Oud. Flute, oud. Okay, flute it is, because there's way more flute answers. You guys get what you want, you needy little audience, and I love you. I'm kidding. I always try my best to provide you guys what you think is valuable. I'm just giving you a hard time. Can't believe I said I want to punch you in the throat if you don't like the video today. Okay. Hold on. The second fetish is not in tune. Did you guys know you can tune a flute? Check this out. Yes, thank you guys. I love that we get to share some music with you. It's like a 500-person audience. It's like a little intimate, sexy acoustic jam. See you guys again on tomorrow's episode. That's right. Every day for the next year, Tio is going live. And I'm even going to have a vlog for you today, I think, as well. Yeah, that's right. I'm getting some vlogs. You guys get some sexy, gratuitous B-roll of Costa Rica next. Bam!